December is a crazy month. Chrystia Freeland just resigned as Deputy Prime Minister and Finance Minister. That is nuts. We also had a 50 basis point decrease in the overnight bank rate to 3.25, lowering our prime rate to 5.45. I guess that's good news for people paying mortgages and real estate investors in general. That is a total of 5 consecutive rate drops for a total of 1.75% since June of 2024. This is crazy. The politics has really overshadowed what's going on, and they've also done a HST rebate, which is confusing the hell out of everyone. I think it's going to cost the retailers as much as they're going to increase, or maybe more, in their sales. I think that's going over like a lead balloon. We have a government that's really not supported by its own party. We have an opposition party that's holding them into power that should probably do a vote of non-confidence. And let's see how that leads into our yield curve. Well, if you look at our yield curve, it's essentially flat with a small dip. And that is not a good sign. We're still in a recession. What we predict is that we need to be down, and there's a slight trend in, we're just following the trend of the curve to create a normal yield curve. We believe just on that trend, we should be about 2.25 to create what looks like a normal yield curve. And that might ward off or fight a recession. So I'm predicting that we should be down 100 basis points as soon as possible. We also saw unemployment increase to the highest level since September 2021 to 6.8% from 6.5% the month before. This represents a 1% increase in unemployment year over year. That's not headed in the right direction. I actually think it's not peaked. I think we might be heading in for another 1% over the next 6 months if we don't take quick action to deal with the pending recession. That being said, inflation seems to be under control and it's at 1.9%. That is also a good sign, but a bad sign. That means, you know, we could be doing better in terms of growth. We should be at 2%. That's sort of a mixed signal. We think it's good, but it could be bad. The other big issue we're all dealing with is Donald Trump and his imposing of tariffs on Canada and Mexico. This sounds really bad, but this is not new. This has happened in the past. It's not necessarily good for Canada or the United States. It creates a huge dead zone of economic activity as we shift the demand curve down. What will end up happening is our dollar will go down as our productivity goes down, which will also cause our interest rate to go down. The only way to combat that and attract new investment is also we'll have to decrease our corporate tax rates, go back to having a more favorable capital gains tax, and that should bring us back into equilibrium. That being said, any amount of tariffs we put on or tax on additional or having anything to do with taxing between countries just creates a negative drag on productivity and growth for both countries. Free trade's good, but that's not for us right now. That's all trending towards having lower rates, so we should do that sooner. It also trends us to have a lower dollar, which will just cause us to stay in Canada, not buy from the US because it'll be too expensive. The US dollar is also going up relative to the rest of the world, so we'll be importing from other places other than the United States. That's what's going to happen if they actually go through with the tariffs. However, even talking about tariffs in the United States is bad enough to move investment to the United States. So what does that mean for real estate? Well, I don't know if the tariffs have much impact on real estate, but they certainly have impact on economic activity, which will lower interest rates, which are generally good for real estate investing. So lower rates are generally good for real estate investing. That's our market update for the end of 2024.